Hi there, good morning. You're watching Market Cafe on ET Now. It's me, Snehi Shah, and well, this is a show where we're going to take you through everything that's been happening in the world since our markets closed yesterday and everything that happened overnight while we were fast asleep. And not only in India, but we're going to take you through everything that has been happening globally as well. So let's just kickstart the show with them, because in the second half of the show, we're going to be talking about all the stock-specific action that you need to be watching out for in today's trading session. So first up, let me take you through what the US handover is looking like this morning. And stock futures were a little changed on Thursday following a fresh record close for the S&P 500. Remember, there is no stopping when it comes to S&P 500. This is the fourth consecutive session where S&P 500 has closed at a fresh record high. Strong quarterly results from Adobe are also in focus. Stocks are coming off a winning session that saw the S&P 500 notch a fourth straight record close, like I mentioned. The tech-heavy Nasdaq also ended the session at a record. Wholesale inflation unexpectedly ticked down by 0.2% last month, while economists polled by Dow Jones expected the gauge to increase by 0.1%. That follows a consumer price index reading that was flat on a monthly basis in May. Now, hopes for a continued cooling of inflation have boosted equities this week. The S&P 500 and Nasdaq are on pace to end the week higher as well. The S&P 500 has climbed almost more than 1.5% at 1.6% to be exact, while the Nasdaq has added 3.1% as well. However, the Dow is the lone laggard with a 0.4% decline coming in. So watch out for that index, because it has been relatively under pressure compared to both of its peer indices. But while that was on the US front, let's also shift focus and take a look at what's been happening in Europe, because, well, yet another sea of red coming in across the European markets. You have DAX that has closed a whopping 2% lower. You have FTSE that has closed more than 0.6% lower, and the Pan-European Stock 600 index has closed lower by 1.3%. You could say there's a carnage coming in across European markets, because DAX has closed 2% lower, and all sectors have been trading in the red. Auto stocks have been leading all the losses when it comes to European markets. They have hit the lowest level in the last 4 months. So while things look okay pretty much for the S&P as well as for the Nasdaq, Dow slightly under pressure intraday and as well over the course of the week too. But when you look at European markets, you can't say the same, because highly under pressured is where the European markets are coming at. DAX, however, the one to look out for closely, because that index has closed 2% down intraday. But while that was all of that about the US markets, Shreyanshi, also take us through what's been happening in the world of oil.
Absolutely, yes. Good morning, Snehi. So when you look at oil, what you're seeing is that there's a little bit of resilience, especially after that sell-off that we saw last week. So right now and for the week, the oil prices are rather resilient. So oil is up about 4% for the week. And that is something that you're seeing play out for oil prices. Now, when you take a look at what happened last week, there was quite a sell-off, like I mentioned. And when you take a look at prices, then WTI was up about 12 cents or 0.2%, and year to date that contract has also gained 9.7%. Currently it's around $78 per barrel. When you take a look at Brent as well, you're looking at gains of about 15 cents or about 0.2%, and year to date that contract is also up about 7.4%. So that largely is the picture coming in for oil. Let's also take a quick look at what gold did, and gold extended declines largely after US producer prices data, and that is the picture that we've seen play out for gold, because spot gold was down over 1%, around those 2,300 per ounce levels. So that is what we've seen play out for gold prices. Let's shift focus back to oil though, because that's quite the resilience that we've seen coming in for oil prices this week, and OPEC is also calling for more investment in fossil fuels, dismissing predictions of peak oil demand by 2030, and OPEC Secretary General Haitham Al-Ghais also emphasized the need for continued oil industry investment to prevent future energy shortfalls. In fact, he also projected a demand growth of 25 million barrels per day by 2045, driven by China as well as India. And this contrasts with the IEA's warning of a future oil surplus due to increasing production as well as slowing demand. Now, the IEA predicts global oil supply will exceed demand by 8 million barrels per day by 2030. So that is the forecast that IEA gave for context there.
Absolutely, lots happening when it comes to your equity markets as well as gold and oil. But let's also take a look at what's on the anvil for us today. And from India, then you have the WPI inflation coming out, so watch out for that. You also have the forex reserves as well as trade balance data out today, so watch for that. From the global side, then from US, you have Fed's balance sheet and the Fed monetary policy report will also be out. And well, with everything that's been happening in the world of crude, you also have the Baker Hughes oil rig count coming today, so keep a close eye on this metric as well. From the Eurozone, then again you have trade balance coming out, so watch out for that. Shifting focus back home, it might be the end of the week today before we head into a long weekend, but still lots of cues to watch out for today because Mahindra Group Investor Day is going to be taking place today, which means all M&M Group stocks are going to be in focus. EIH Associate Hotels is going to issue bonus shares today, so watch out for that as well. HUL, Adani Energy, Adani Green Energy, Adani Power as well as Elecon Engineering. All of these companies have their annual general meeting today, so it's going to be some important forward-looking statements and commentary that we're going to be watching out for from all of these companies today. Kamdhenu Ventures is headed for a stock split in their face value from 5 rupees per share to rupees 1. And lastly, it's the last day to buy our shares of BKG Foods, BSC Industries, Forgings, L&T Tech, Torrent Power, Canara Bank, ACC, Adani Total Gas, Bajaj Auto and a whole host of other stocks to be eligible for their dividend. So watch out for all of these counters as well. But shifting focus then, we also have the Japan rate decision that we'll be talking about soon, and ECB President Christine Lagarde is all set to speak, and Fed member Austin Goolsbee also all set to speak after the Fed has kept the rate steady for the 7th time in a row. So well, lots of important commentary to watch out for both from managements as well as global leaders. So lots on our radar today, Shreyansi.
Well, absolutely lots on our radar, and let's keep the spotlight on macroeconomic data coming in then. And wholesale prices fell unexpectedly by 0.2% in May, below expectations of a 0.1% rise driven by drop in final demand goods prices. The producer price index decline indicates easing inflation. Markets are also priced optimistic that this data might prompt the Federal Reserve to consider rate cuts later this year, and the PPI's annual increase stands at 2.2%.
Alright, and the US unemployment claims have surged by 13,000 to 242,000 for the week ended June 8, the highest in 10 months and exceeding expectations of 225,000. Outstanding claims also rose to a 5-month high. This suggests a cooling labor market and strengthens the case for potential Federal Reserve rate cuts if inflation trends towards its target. Now remember, unemployment rate reached 4% in May, its highest since January 2022 as well. So it's going to be a metric that we're going to be closely watching out for in the weeks to come, and this could also be a basis of the Fed cutting rates if inflation comes to their target level.
Yes, and moving on then, US Treasury Secretary Janet Yellen emphasized the importance of public investments to attract private capital for sustainable growth. Speaking at an event in New York, Yellen also criticized China's state industrial subsidies as excessive. She also rejected traditional supply-side economics, arguing it has not benefited enough workers. And she also contrasted this with the Biden administration's approach, highlighting major legislative initiatives like the 2021 Infrastructure Law and 2022 Clean Energy Tax Credits. She called for a balanced economic strategy involving both public and private sectors.
Alright, let's keep it going with all the important global news then. And Tesla shareholders have voted to reinstate Elon Musk's $56 billion pay package at the annual meeting in Austin, Texas. This comes 5 months after a Delaware judge rescinded the 2018 pay plan, calling it unfathomable. Now, despite the court ruling, the shareholder vote provides a PR win for Elon Musk. They've also approved relocating the company's incorporation from Delaware to Texas.
Shifting focus to some earnings then, and Adobe shares soared 17% in extended trading after the company reported better than expected earnings and revenue. Adobe posted adjusted earnings of $4.48 per share and $5.31 billion in revenue, surpassing estimates. The company also raised its full-year guidance, and CEO Shantanu Narayan said that they don't expect any impact from global macros.
Alright, let's take you through whatever is the latest happening at G7 summit, and Prime Minister Narendra Modi is in Italy to attend the 50th G7 summit. This marks the Prime Minister's first international trip since assuming office for a third term. He is accompanied by a high-level delegation, underscoring the importance of this summit for India's diplomatic and economic engagements on the global stage. During the G7 summit, PM Modi will participate in an outreach session focusing on critical issues such as artificial intelligence, energy, as well as talks on Africa. India is expected to play a significant role in the G7 summit with a strong focus on security issues, and this marks India's 11th participation in the summit and PM Modi's 5th consecutive attendance. Now, the G7 summit is taking place during a critical period amidst ongoing conflicts in Ukraine and Gaza, as well as significant political events in the G7 countries. We also had a chance to speak with Suhasini Haidar, the diplomatic editor at The Hindu, as well as Professor Madhav Das Nalapat, the director of geopolitics and international relations at UNESCO, Peace Chair at Manipal University in India. Listen in to what they had to say.
Well, I'm not sure because, if you look at the Indian election results, they haven't exactly been a big push for hyper-nationalism. The fact that the one single majority party is now in a coalition government in India means that Prime Minister Modi will also have to be sensitive to the idea that this is not necessarily what the mandate was about. I think when it comes to dealing with Italy, actually the real issues with Italy were over if you remember in the past decade, were over the Marines who had been accused of killing Kerala fishermen, had been convicted, and it was about whether they would serve out their terms here or in Italy. Eventually, India went to the arbitration courts internationally and lost that case. After that, it took a few years to put the India-Italy relationship back on track. But since then, year on year, we've seen a growth. We've seen several visits by the prime ministers, including Prime Minister Maloney.
Germany, and whether it's other countries, they are opening the door to skilled Indian immigration, especially Indian immigration related to tech and to advanced industries. Now, a lot of Indians are studying in Europe, and many of them have been incentivized to stay back in the countries in which they are studying because they have become professionally so skilled. So from that point of view, I don't see much of an impact on India. And of course, the second point is that in terms of ideology, India has also gone in a very nationalist direction.
All right, then that was the word coming in from Professor Madhav Das as well. But let's move on, and those were all of your updates. But here's a programming note for all our viewers. ET Now is celebrating its 15th anniversary with a landmark event, the ET Now Leadership Dialogues, from a keynote address by the RBI Governor Shaktikanta Das to fireside chats with Keki Mistry, Dinesh Kumar Khara, Ashish Kumar Chauhan, Utpal Sheth, as well as Manish Chokhani. It will be an event you simply cannot miss. Indian Hotels Puneet Chhatwal and Tata Consumers Sunil D'Souza will also be joining us to discuss the future of hospitality and consumption, followed by an inspirational talk by Gauranga Das that will provide invaluable life lessons. So stay tuned to ET Now on the 18th, that is Tuesday next week, and join us in our celebrations. But for now, let's take a quick break.
Hi there, welcome back. You're still watching Market Cafe on ET Now. Let's get a little stock specific now and talk about Vodafone Idea, because that board has given a green signal to a 2,458 crore fundraising via the share sale to Nokia as well as Ericsson. The move will help the telecom major reduce its debt, and my colleague Anurag Joshi is joining us with more details on this. Anurag, good morning. Take it away.
Telecom firm Vodafone Idea is poised to get another round of cash infusion with the India units of Nokia and Ericsson planning to invest in the equity of the company. Vodafone Idea board has approved a preferential allotment to the India units of Nokia and Ericsson, and the two entities will be issued 166 crore shares at 14.8 rupees a share. Now, the infusion into Vodafone Idea from this exercise will be 2,458 crore. Nokia will be investing 1,520 crore, while Ericsson will be investing 938 crores. This allotment of shares is 35% higher than the FPO that was concluded by Vodafone Idea in April. Vodafone Idea had completed an 18,000 crore follow-up public issue in April towards raising money to meet or to tide over a cash squeeze and also help repay debt and meet its obligations towards expanding the 4G and 5G network. Also, at the same time, one of the promoters of Vodafone Idea, Aditya Birla Group, had announced an infusion of over 2,000 crore rupees. This was in early April. Now, post the cash infusion from Nokia and Ericsson, Nokia will be having a 1.5% equity stake in Vodafone Idea, while Ericsson will hold 0.9%. The promoters, Aditya Birla Group and Vodafone PLC of UK, will be holding 37.3%. The government will own 23.2%, while the remaining shareholding with the public will be 37.1% in the company.
Right, thanks Anurag for all of those details. So let's keep it going with Vodafone Idea and delve a little deeper and take a look at what the brokerages had to say, because we've had a note with JP Morgan having an underweight call on Vodafone Idea, and they have a target at 7 rupees per share as well. Gaurav is standing by with the key takeaways of that note.
Well, yes, Vodafone is coming up with fundraise, and if you look at the stock performance, it has already shown a negative performance. And on back of this news, if we look at the brokerages also now, they are also not being so bullish about this equity raise. So JP Morgan, as you said, has actually remained underweight on the stock with a target price of 7 rupees per share. What they believe is that the equity swap that we are seeing is basically to address the underlying issue and the legacy vendor dues that have been seen in Vodafone Idea. They also believe that the further dilution of equity cannot be ruled out from here on. They also believe that the repayment and clearance of the past dues of Indus Towers because of this news could be delayed further. So we also need to keep an eye on Indus Tower on the back of this. And lastly, they also need to know that there is around 21 billion of the debt which is left with Vodafone Idea, and there is no clarity on the repayment of this debt. So if we look at the brokerages like JP Morgan, they are not being a little so bullish when we talk about Vodafone Idea's equity raise. They are rather being a little bearish on this while maintaining stock target price of 7 rupees per share. So definitely watching out on what happens on Vodafone Idea as well as Indus Towers, because they have highlighted a few concerns that may raise because of this fundraise from Vodafone Idea.
Alright, thanks Gaurav for taking us through that. Now JP Morgan rather bearish when it comes to Vodafone Idea, price target of 7 rupees, which is surprising because the stock has managed to close at 16 rupees yesterday. So that's more than the 50% cut that they're penciling in for Vodafone. But let's move on, shift focus from stocks and talk about the insurance space, because in fact, let's talk about non-life insurance, and that has logged a growth of 15% in the month of May. Standalone health insurers grew 26% as well. Let's take it across to my colleague Anurag for the performance fine print of all of these companies. And Anurag, good morning. Thanks for joining us right now. Tell us what you're making out of this performance.
So overall sector has shown a growth of 15.47% in month of May, and premium has reached up to the mark of 20,822 crore. Standalone health insurance companies have shown a very good growth of 26.24%, in which listed player Star Health premium is up by 16%. The market leader, the listed player, New India, has disappointed because they have shown a negative growth of 0.67%. Other than that, ICICI Lombard, another listed player, has shown a very good growth in month of May. The premium has gone up by 21.64%. If we talk about the newly listed company, Go Digit General Insurance, because recently, just few days back only, they got listed on exchanges. Go Digit has also shown a very good growth. The premium has gone up by 36%, from 576 crore last year to 783 crore. So it's overall performance by non-life insurance sector, where ICICI Lombard has shown a very good growth, but disappointment by New India Assurance.
Thanks, Anurag, for joining us bright and early this morning and getting us the May scorecard of the non-life insurers. But let's move on then. And AMFI will be releasing its semi-annual categorization of stocks in the first week of July. Nuvama expects several names like Hero Moto, JSW Energy, Zydus and others to become large caps. Sharad is standing by with all of those key highlights. Sharad?
Well, yes, as per Nuvama, the semi-annual changes which are happening as per the AMFI classification, the entire categorization is expected to take place with effect from 1st August, and the announcement is likely coming in the first week of July itself. But which are the potential large cap entrants which the street is estimating? Of course, the larger names as per Nuvama includes Hero MotoCorp, JSW Energy, Zydus Life, NHPC and BHEL. On the other side, the potential mid-cap entrants, the list is on the larger side. They include Hudco, IRB Infra, Bharat Dynamics, BSC, NLC, also Cochin Shipyard, Nalco and Hincopper also make it to the list. Also, two interesting names coming up in this mid-cap entrant list is ITI and Blue Star as well. But there are certain stocks where they might be coming down from the large cap category status to the mid cap category status, and the names include Berger Paints, SBI Cards, Marico, SRF and even ICICI Lombard. And lastly, from mid cap to small cap also there is a journey. The stocks can be actually classified into. These names include Z, Piramal Enterprise, IIFL Finance, Ramco Cement, Relaxo Footwear, and also a couple of names coming in from Kansai Nerolac, Timken India, Vedant Fashion and Sun TV. But importantly, whenever the classification happens, it doesn't actually translate into any kind of flows, but the categorization itself, once it is actually fulfilled, then it actually helps fund managers to actually put them in various schemes.
Alright, Sharad, thanks for taking us through that. So big news coming on that front. We'll be keeping a close eye on all of the stocks that Sharad has mentioned. Now let's shift focus to some important updates coming in. The next GST Council meeting is scheduled on the 22nd of this month. Remember, the last one was held all the way back in October last year when the council levied 28% on online gaming, horse racing as well as casinos. What's on the agenda and what's going to be this? What's this meeting going to look like? Let's take it across to my colleague Sumit, who has more details about the same. Sumit.
Well, next week's GST Council meeting is going to be the first after Lok Sabha elections have gotten over. Now, certain issues or issues to be watched out are, first of all, online gaming, where 28% GST was imposed in October last year. Whether that is reviewed or not is one big issue to be watched out for. Second is inverted duty structure. IDC on many goods like textiles, leather goods and other goods is also one point which will be looked out for, whether any decision on that is taken or not. Rate rationalization has always been one key point to look out for, and that is to be seen whether that happens or not in the next GST Council meeting. This meeting can also be used by state finance ministers to give their input on budget. Also, ITC issue can come up, and that is very important issue that can be discussed in next week's meeting. We have to keep in mind that GST collections have been good month after month. 1.7 lakh crore rupees collections were in the month of May. 10% jump in collection we registered. Well, that's giving a buoyancy to the overall GST collection and finances of the government. So that could be used for giving relief to certain sectors. So having said that, next week, Saturday, is the date when the GST Council meeting is happening, and all things will be clear on that day itself.
All right, thanks Sumit for getting us all of those important details. Well, let's move the focus to the cement space now. And Adani Group owned Ambuja Cements has acquired Southern India's Penna Cement Industries, valued over rupees 10,400 crore. Now, Ambuja is poised to expand its market presence in South India and reinforce its position as a pan-India leader in the cement industry. We have Ashesha standing by with all of those important details of the deal and the contours as well. Ashesha?
Well, yes, Ambuja Cement has acquired Penna Cement at an enterprise value of a little over 10,400 400 crores, which will be fully funded via internal accruals, and this will make Adani Cement third largest cement manufacturer in the southern region. Now, as far as this acquisition is concerned, Penna Cement has a total capacity of about 14 MTPA currently, out of which 10 MTPA capacity is operational, and the balance 4 MTPA will become operational in the next 6 to 12 months. Apart from this, also remember that it has surplus clinker facility at Jodhpur, which can support additional 3 MTPA capacity. As far as valuations are concerned, it is attractively priced. So at a total capacity of 14 MTPA, the deal is valued at $89 per ton, which is very good as compared to the recent acquisitions that have happened in the industry. As far as Adani's cement capacity is current, without this acquisition, the current capacity stands at 79 MTPA. With this acquisition, it will go up to about 89 MTPA. And remember, the company is targeting, or the group, Adani Cement Group, is targeting to increase its capacity to 140 MTPA by FY28. So with this acquisition, it is on track to achieve this target. Now also let's understand how will it really help Adani Cement. It will help increase its presence in the southern market, especially in the states of Andhra Pradesh, Telangana and Rajasthan, and 90% of Penna Cement's capacity comes with railway sidings, and some also has captive power plants. So that's an added advantage that Adani will get as a result of this acquisition. As a result of this acquisition, their market share will also increase. So pan-India market share will increase by as much as 2%, and South India market share will increase by as much as 8%. Let's talk a little bit more as far as valuations are concerned. Remember, the last deal that happened in the industry was when Ultratech acquired Kesoram in November last year, which was done at a valuation of about $102 per ton. Before that, we had Adani Group, which had acquired Sanghi Industries at a valuation of about $100 per ton. So if we look at the valuations, this deal is also attractively priced at about $89 per ton. We have a couple of brokerage notes that have come in. Morgan Stanley has maintained its equal weight stance with a target price of 665. They say that the deal is incrementally positive for the full industry. So all in all, yes, brokerages have given a thumbs up. It is attractively valued and will increase Adani's presence in southern India market.
All right, thanks Ashisha for getting us all of those important details. We also had Macquarie that came out with a note, and they had a neutral target as well, and they've talked about a whole host of things from the capacity share expansion as well as the deal value. But we have a jam-packed lineup for you on the market. At 8:40, we'd be in conversation with Ronald Sioni, research analyst, infra and cement at Sharekhan, to talk about the consolidation in cement and just what we discussed a few seconds ago rather. And at 9:20 then, we'd also be talking to Tahir Badshah, CIO at Invesco MF, to talk about the markets and more, and to see what roadmap he sees for the sectors as well going forward. At 9:30 then, we'd also be talking to Jairam Sampath, Whole-time Director and CFO at Keynes Technology, to talk about the company's growth roadmap. At 9:50, we'd also talk to Vineet Sahani, CEO and Director of FEAM Industries, to talk about the demand picture and how he sees that shaping up. At 10 a.m. then, we'd also be discussing what's next for the IT sector with Sumit Pokharna, VP Analyst, Kotak Securities, Jagannathan Chakravarti, CFO, Sonata Software, as well as Didi Mishra, VP Analyst, Gartner. At 10:20 then, we'd also be talking to Abhishek Kapoor, Group CEO at Puravankara, to talk about their fundraise plans and more. So keep an eye on all of those interesting conversations lined up.
Hi there, welcome back. Let's also now take it across to my colleague Ansh, who's standing by with a snapshot of what the F&O space is expected to look like today. Ansh, take us through the levels that you're spotting and all the stocks that we need to be watching out for.
Right, so let's start with what FIs did in future and option market actually. If you'll see, in index future, they added around 27,000 long contract. They covered around 18,000 short contract, due to which the total long has gone up from 41.4% to 46.3%. We are just a few 4 to 5% away from getting majority into long position. If you'll see, this is the 7th short covering which we are seeing in by FIS, and this is the longest short covering seen in at least 3 years, showing their positive cautious stance in the market. Now, if you see Nifty, index has actually touched all-time high level, but it missed that 23,500 mark by 20 points. And this is because yesterday there was very heavy call writing happening at this 23,500 mark. And today as well, we are seeing most active call writing happening at that 23,500 mark only, indicating traders expecting this level to have very strong resistance. If we talk about other Nifty Bank, the Nifty Bank has been actually consolidating from last 6 sessions. Actually, the same thing has been happening in Nifty as well. So currently the market is very dull and in a sideways consolidation. In Nifty Bank, we are seeing call writing happening at the psychological level of 50,000, indicating strong resistance around this level. Let's see what stocks are in focus in FNO segment. And we are seeing significant long build-up in Oracle Financial, Gujarat Gas and ICICI Prudential, where a short build-up in Marico and Britannia. Also, if you'll see band list, then here we are seeing GMI Infra, Hindustan Copper, India Cement Sale, and new edition of Sun TV. So keep an eye on the stocks.
Absolutely, Hans. Thank you so much for getting us that roundup. But let's move on then, and we have Jinay standing by with the list of stocks that you should be keeping on your radar then. Jinay, what's on your list?
Well, yes, so Dixon Tech, Kane Technologies and all of the EMS stocks will be focused as Ministry of Electronic and Information Technology plans to invest about 30,000 crores as a capital subsidy for electronic component scheme as it's part of a 100-day agenda. Also, Purvanka will be in focus as the company has approved to raising funds of not exceeding above 1,000 crores. Rights will be in focus as company has signed an MOU with DMRC for exploring consultancy and operation and maintenance work for metro rail systems. Also, keep your eyes on electro-steel castings as they have approved a proposal for setting up a plant for ductile iron pipes and fitting in Odisha, and they will be acquiring a land of about 500 acres for the same. Also, SEPC will be in focus as they are looking to consider fundraising, and the board will be meeting for the same on 19th of June.
Alright, Jinay, thanks so much. You're going to be keeping a close eye on all of these stocks, but well, one stock that you need to be keeping a very close eye on is Prestige Estates. In fact, the entire real estate space was abuzz, the top gainer yesterday on the back of Sobha announcing its fundraise as well via rights issue. But today morning, Prestige Estates is in focus, and there really is no stopping for the stock because in the last 1 week, Shreyanshi, the stock is up 6.5%. In the last 9 months itself, it is up more than 200%. Despite this upside, let's see what CLSA has to say on this stock, and they've retained a buy rating on this stock, and they have raised the target price from 1,875 rupees per share to 2,320. So big upside coming in from where the stock is currently at. Now, they believe that the operating cash flow will support the capex plans that the company has going ahead, and project pipeline also is going to be supported by this. It looks rather robust, and they're expecting the re-rating to continue, but the debt concerns, they say, they seem to be overdone right now. And they also believe that this company, despite the run-up that it has seen in the distant past, valuations are still trading at a discount to peers, so they're very bullish when it comes to Prestige Estates. Price target of 23.20 per share, and they've retained a buy rating.
Well, absolutely, and let's get you some more details from outside the world of stocks, then starting with some somber news. A special Indian Air Force aircraft carried the mortal remains of 45 Indian victims killed in the deadly fire incident in Kuwait's Mangaf. Minister of State for External Affairs Kirti Vardhan Singh coordinated with Kuwait authorities to ensure swift repatriation as well. Moving on then, the Bengaluru special case has issued a non-bailable arrest warrant against former Karnataka Chief Minister B.S. Yediyurappa in a POCSO case. Meanwhile, the CID has already summoned Yediyurappa and asked him to appear for questioning in the case as well. Moving on, the scorecards of around 1,500 students who appeared for National Eligibility Cum Entrance Test or NEET exam will be scrapped. The National Testing Agency will be holding a retest for these aspirants on June 23rd, and students can choose to appear or accept their previous result.
Alright, moving on then, let's talk about a weather update, because while it is raining in Mumbai, India has possibly faced the longest ever spell of heat wave days, with IMD revealing that Odisha has experienced extreme weather and has topped the chart by recording the highest number of heat wave days, followed by Western Rajasthan, West Bengal as well as Haryana. Now, the World Health Organization, the WHO, has confirmed the human case of bird flu in India caused by the H9N2 virus involving a 4-year-old child in West Bengal. Remember, this marks the second human case of bird flu in India. And well, on the sports front then, Sri Lanka has been eliminated from the ICC T20 World Cup Super 8 stage after Bangladesh beat Netherlands by 25 runs last evening. Bangladesh's win over Netherlands saw them reach 4 points from 3 matches in Group D. Remember, South Africa has already advanced from the same group. And talking about the match, Bangladesh was boosted by Shakib Al Hasan's unbeaten 64 to set a 160-run target for the Netherlands.
Alright, then as we wrap up the show, it's a goodbye from me, Shreyansi Singh, as well as Snehi Shah, and we thank you for tuning in. But then let's also listen into commentary coming in on the Indian economy. We also caught up with Chetan Aya of Morgan Stanley. Listen to what he really had to say about the Indian economy as well as rate cuts.
Credit growth is running at a pretty healthy and strong run rate. At that rate of credit growth, the leverage pickup in the system is quite meaningful. So it will be difficult for RBI to encourage further acceleration of credit growth by cutting interest rates. At the same time, the deposit growth is much lower compared to credit growth. If they cut interest rates, it will encourage banks to cut deposit rates, which will take them further away from that bridging of gap between credit growth and deposit growth. And then the other aspect that we were thinking about is the trajectory of inflation. So to the extent to which we think inflation will go down to 4.5%, but not necessarily 4% and sustainably stay there, it will also be difficult for RBI to cut interest rates because of that reason. So in the next 12 months, we think that 6.5% to 7% growth is likely. And then beyond that, we are at 6.5% on a real basis going forward. And that is up to 2030. So we think that, the way you think about India's story now is that it's going to compound on a high GDP base at that moderately high run rate. And that's going to ensure that India's GDP is rising up to about 8 trillion by 2032. So we've got a strong growth forecast continuing into future. You are going to have this investment push and investment-driven growth rates. That is going to ensure that the productivity environment is well kept and well maintained. That will keep the macro stability indicators in check.